Hello, I'm Greg Ninnis for interest.co.nz, and today I'm talking with Chris Kennedy, who's the Chief Executive of New Zealand's largest real estate company, Harcourts Group. Welcome, Chris.
Thank you, Greg. Nice to be here.
Thank you for coming. And we've seen a resurgence of the market in March.
Yes.
And that came after a period that things quietened down for a bit at the end of last year and into the beginning of this year. There were some regulatory changes brought in as far as tax rules go and things like that, designed to particularly slow the housing market in Auckland. And that seemed to work for a while, but it appears that the effects of those now have moderated somewhat and the market is once again resurgent. Is that how you see things?
It is, and I think if you go back to the bright line test, the LVR ratios that were introduced October, November of 2015, there were indications then that it was going to take a 60-day period thereabouts to get over the backflow and to create a normal flow. And I think we're at that point at the moment. We've seen that the bright line test kick in, and I think that we're actually in the new normal. We're starting to see investors come back into the market. We're starting to see a lot of activity. That coupled with low housing stock is just driving the market forward.
And low interest rates.
Low interest rates,
they just
incredibly
keep getting lower and lower, don't they?
Yeah. It's an incredibly affordable time from an interest rate perspective to buy property.
Yeah. And do you think this created, that period where things were quieter, created perhaps a bit of a backlog of pent-up buyer demand where people were maybe putting off making a decision about buying or selling and suddenly they've decided, no, we go ahead? Is that happening?
I do agree with you to a certain degree that there would be a degree of uncertainty and there would be a degree of, gee, we don't know what's going on. Mm-hmm. That's levelled out now. We're now that 90-day through that period plus. Right. So I think we're in the new normal and people are accepting of it. It's just part and parcel of buying property, whether it be first home, second home or investment. It's part and parcel of the process here in Auckland.
And when those new restrictions came in, the LVR restrictions, a lot of that was aimed at investors rather than normal property buyers, just
That's right.
buying a house to live in. Have you seen investors coming back into the market? Were they holding off before particularly and are now getting back in and buying again?
There are a degree of investors coming back into the market, but what happened was through that October-November period, they headed out of Auckland. They went down into your Waikatos, down into Wellington and Christchurch.
Right.
And we've seen an insurgence of interest and buyer inquiry and property sales through those areas as well. But they're starting to come back in because...
To Auckland, you mean?
To Auckland. And I believe that's because while...
How are they making any money?
Well, they're making money based on the fact that interest rates are low and they're looking for an equity increases. Right. And if you look at our average sale price here in Auckland for Harcourts across our residential market, $940,000 average sale price in the month of March. It's the highest it's ever been.
Okay, so they're accepting really low yields, but expecting capital gains.
Capital gains is where it's at the moment for the investors.
All right. Have you had a sense that the type of investors buying has changed, that maybe not so many, if you like, professional investors who might have a portfolio of properties and more mums and dads perhaps later in life, and they've seen a significant increase in the equity in their own home and they're prepared to leverage off that to buy an investment property?
There is a degree of that. We are seeing that, and that's coming across quite confidently and commonly. We're seeing mum and dad saying, well, hey, we're going to get on this as well and we're going to be a part of it.
Because they're only getting 3 or 4% at the bank if they're lucky.
Well, some of the growth that we're seeing in the real estate market is actually better growth from an equity perspective than it is by having your money invested in the bank.
Sure, okay. And at this time of year, things do start to quieten off traditionally in the market as we leave summer behind and head into autumn. Any sign of that this year? What's the seasonal trend?
Look, I don't know if we are going to see a slowdown. If you look at the migration predictions and the migration figures that we've seen, they're still incredibly strong. Your interest rates are incredibly low. So all factors point towards this continuing. We've got a massive housing shortage. And I don't know how we find 30 or 40,000 houses, put them into the mix, and then fill the buyer need that we've got, because it's just not there. But to my way of thinking, it goes beyond just finding houses. It goes back to infrastructure, it goes back to roading, it goes back to transport, it goes back to services both below the ground and above the ground. So we actually have to start looking at all of that, because we just can't put up a whole lot of houses and build a whole lot of property and say, well, there you go, because our roading and ready, if you look at Auckland, is just chaos.
Sure. And of course, the demand is there now. The migrants are arriving here now every day off the plane and so on. But those things you're talking about that we need to accommodate them take years to develop. So
They do, and you've got people moving north and south of Auckland to buy cheaper housing, but then they're soaking up the cost that they're saving in housing through transport and time sitting on the road waiting to come through. I came up from Hamilton this morning, having been to an awards ceremony last night, and it took just on 2 hours to get from Hamilton.
Okay. As far as the real estate industry goes as a business, it's nice to be in a market that's buoyant and where prices are high, but I guess the industry depends on the number of sales is really what keeps it healthy. How is that at the moment? Is the industry, is there a lot of sales coming through or not enough? And how does that compare with previous years?
The volume of sales is what I would say solid, but as our housing stock diminishes, then that puts pressure on the availability of housing to sell. So as our numbers are reducing all the time of the available stock, I'm not sure that we'll be able to sustain the same volume. So that in turn lifts the values, as we all know with the supply and demand theories, basic economics.
Right. So this actually could put some pressure on the industry just because the volume of sales
absolutely
will decline.
But then you've got your savvy investors. You've got people saying, "Gee, I've had an increase of equity of XYZ dollars or percentages. I'm going to pay that. I'm going to reap the benefit of this, and I'm going to put my house on the market. I'm going to sell. I'm going to take the equity, and I'm going to go and do the things that I haven't done in a long time or haven't been able to do."
Yes, okay. Have you seen much evidence of that in the market, of people out there who have had, an investment property most likely that they might have had for 5 or 10 years and think, wow, now is a good time to... people might still be buying. There's still plenty of people buying. But for those that have had their properties for a long time, could also be a good time to cash up.
Well, there's a number of people that are at different stages in their lives that are saying, I'm going to sell my investment property. I've had it for the last 5, 10, 15 years. I've seen great equity growth. So I'm going to sell the property now, and I'm going to retire, and I'm going to be able to have the retirement I looked for. And then there are those that are selling investment property that have leveraged their family home. They're selling their investment properties, and they're using the equity from their investment properties to reduce the debt on their family homes, or in fact clear the debt on their family homes. So again, giving them a different quality of life, and we're seeing a lot of that happening.
Okay, so a lot of that will depend probably on when they bought those properties.
Absolutely, but even if you look across the country now, if you've bought property in the last 2 to 3, 4 years, in most of our regions, there is the ability to see some type of growth in terms of equity. Okay.
How sustainable do you think the recent upturns we've seen in the regions is going forward? Because we've seen some big increase in prices. We've seen investors moving out, but they're small markets, and it doesn't take much for them to get a few extra buyers coming in can have a big impact on a very small market. Do you think there's a danger they could get ahead of themselves?
There's always a danger that they can get ahead of themselves, and you could say that provincial New Zealand, or in fact the smaller centres, are more susceptible to change than what the larger Aucklands, Wellingtons and Christchurches are. But I do believe that if our migration figures continue at the same rate that they have for the last couple of years, then again it's going to spread out through the provinces, it's going to spread out through those smaller centres you talk about, Greg, and it's going to place pressure on housing. It will change. I've been in real estate for 24 years. I've seen the ups and the downs, I've seen the highs and the lows, and they always come and go. So you just need to prepare yourself for change, because it will happen.
It will happen. We just don't know when.
We don't know when.
Okay,
no.
Very good. Great. Thanks for coming in today, Chris. That was Chris Kennedy from Harcourts Group.